Hey guys, welcome back. I have been super duper busy making these videos so you guys can learn in a very structured way. It'll be ready soon, I promise, but I just want to pop in and do a quick video for those who are ready to get started now. I'm getting a lot of questions on how to start. So I'm going to touch on how to read the charts. That's where you want to start. You want to learn how to read the charts. The market is telling the story and you got to understand it. So that's where we're going to start in this video. In this video, I'm going to show you how to read a chart from scratch with no indicators, nothing extra. This is the foundation I wish someone gave me when I first started trading NAS. So let's break it down simple as if I'm teaching my daughter. Okay, so first, what is a chart? This is a chart. It's basically just a visual representation of how price moves over time. So every candlestick, you see we have pink and green for mine. Each of these are candlesticks. So every candlestick is basically showing you a battle between buyers and sellers. So basically, if the buyers are winning, you have the price moving up and you get bullish. When the sellers are winning, you get bearish candles and price moving down. So that's kind of a simple way to understand the candlesticks. Green is typically bullish. On other charts, you may see red, but I use pink. You can choose whatever colors you want. Some people use black and green for psychology reasons, but these are the colors I use. So now that you understand the candlesticks, we have our time frames. And with the time frames, it's basically just showing the quote unquote battle in different views. So here we have the daily time frame. This gives you the overall big picture. So each candle that you see represents a day's worth of price movement. You see that? Then we can move down to the 1 hour, where each candlestick represents 1 hour. So you're seeing a different view that encompasses several candles versus the day candle. So a day candle is the big picture. And then as you move down in the time frames, which after the day you have the 4 hour, then the 1 hour. I don't use the 4 hour that much, but the 1 hour kind of gives you a different view of the market. Then you can move down to the 15-minute and it gives you a medium view. Let's put it like that. So each candlestick is 15 minutes worth of price movement. And then as we get into the lower time frames, here we have the 1 minute. So it's like a super zoomed in version. And each candlestick equals 1 minute. So every minute a new candlestick will form. Okay, so now here's where things really start making sense. Market structure. You have to understand market structure when you're trading. So the market moves in patterns with higher highs, higher lows, and an uptrend. And then you have lower highs and lower lows in a downtrend. So I can show you this on the chart. So here we have a high and a low. Then we have a lower high, and then we have a lower low. Then we have another lower high and another lower low. Another lower high, and then another lower low. So the market is moving down like so, which is called a downtrend. And the market is considered bearish when it's doing this. Then we have the market shift, and we have the market moving up. So we have a high, low, higher high, a higher low, another higher high, another higher low, and so on and so forth. So this one is considered an uptrend, where we have the market moving like so, up. And that's considered bullish. So a lot of y'all are trying to trade without knowing which direction price is flowing. That's not going to work. That's like swimming against the current. You want to know which way the market is moving. And you want to look at the higher time frames to see the bigger pictures. Back on the daily, you see we had an uptrend. The market was in an uptrend. These are days. See, this is all the way back September 2024. So each candle is a day. The market's been moving up until February. And that's when our downtrend started. Okay, so now different people use support and resistance in different ways. I use support and resistance when the market is in a continuation. Let's see if I can find a good example. So it's just where price previously paused or reversed because of buyers or sellers, okay? So let me also touch on this while we're here. When we have the price is ranging, consolidating. So you have the uptrend, you have a downtrend, and then you can have consolidation where the market is moving sideways. So like here, support is kind of like the floor. Resistance is like the ceiling. But the real move happens when price breaks and comes back and retests. So as you can see, we have support here. The market came here and it moved down. So this is support now turning into resistance. It was previously supporting price where it sent it up, but now it's rejecting price and sending it down. Also, you'll have those days when the market will move perfectly using support and resistance. Like here. Here we have the market push up and break through this line. See where this dashed line is? The market breaks through it. Then it comes back and retests it. Then it breaks even lower. So this is how I use support resistance in a continuation trade. We have another one here. The market broke, came back, retest, and then went even further down. Another one here. The market breaks down, came back to retest right here, and went down again. So that's how I more so use support and resistance in my trading. So it's also good when you're wanting to add positions, because when it's retesting, that's another entry for you to add and then ride it. Now, I did want to touch on how beginners overcomplicate things. So here's where most new traders mess up, and that's one, trading too many pairs. You need to find you one, maybe two, but definitely one pair and master it. Another thing new beginners do is they have too many indicators. Indicators are lag. They're behind. They're not real-time data. I'm pretty sure there are some indicators that do work, that can help, but when you understand raw price action, that's really all you need. And you also need structure. So you can't master the market if your chart is like crazy. You got to understand your chart. So stick to one pair, one setup, one structure. So for me, I use NAS100. That's my pair. That's what I stick to. It moves similar to SPX 500. So if I want to do a super small account, then I'll use SPX 500. But I'm still watching NAS100. So that's how I trade. Another thing, over trading. You don't need 20 trades a week. You need one or two clean ones and be done. So if you understood anything that I just explained, even the basics, you're pretty much already ahead of where I was when I started. The chart tells a story. Your job is to read it, flow with it, don't fight it. So inside the course, I'm still working on those lessons. I'm almost done. And I'll be breaking these things down even deeper, like how to find your entries, confirmations, how to manage your risk. But this right here, this is the foundation. I've just gotten so many requests for people just wanting to know where to start. You want to start with the basics. You want to start with your market structure. You want to understand how to read the charts. And also your mindset. So if you want my breakdowns, hit subscribe and run through all the full playlists I have on here for new traders. Remember, the game is mental. Stay sharp.